His one shot attempt. No, 2 shots. He was open 2.
All over social media were like videos of him and his dad going into the game at the same time.
It's an iconic moment, bro.
Yeah, iconic. Fine. Valuable for the sport?
No,
not so much.
Not so much. Not so much.
LeBron, I hope you're happy because he's clearly a listener.
Well,
you know,
look, he deserves all of it. I want him to enjoy all of it.
I want him to enjoy all of it too. I wish I could have that moment with my son one day.
That would be a dream come true.
If my son was equally unqualified to be in the league with me.
Right, but it's okay. It's all right.
You know, it doesn't matter.
That's just another championship banner for him. I'm so good.
You got to pay him $3 million a year on top
I'm
of it.
so good that my son can get drafted into the NBA
and get $3 million a year.
That's insane. Yeah.
I mean, what are we doing?
It's okay. I'm all for it.
I know you are. I am not.
No, I love the way Reddick handled it. But anyways, we got a show to do.
Oh yeah, hi everybody.
What's happening?
As promised last week, we are a trio of 2.
A trio of 2.
Yeah,
right.
yeah. We are the 2 wise men because the third not so wise man decided he was going to go out on PTO once again.
Yeah, we're gonna do next week. We should do like Halloween costumes. That'll be fun.
Actually, we probably should have done it this week because it would have been out in the week of Halloween.
It would have been the week of Halloween, but we could do it that one too. It's fine.
I'm dressing up on Friday.
Yeah, I know you are.
Woody, baby.
I mean,
yeah.
Your true calling.
Yeah.
That's your true calling.
My son's going to be Buzz Lightyear, and my wife is going to be Woody's, what's his girl's name on Toy Story?
Jessie?
Is it Jessie?
Yeah.
I stopped watching after the second Toy Story. Am I the only one?
You're the only. It's so good.
It's just so emotionally just challenging.
Yeah. No, you have to watch it because the last one that I saw, there was a scene that I thought was a little too intense for kids.
Oh, is that the Buzz movie or like?
No, it's the one. It's I mean, if you haven't seen it yet, I better not.
No, don't ruin it. Don't ruin it. Yeah.
You have to watch it. You have to watch it.
I'm not doing it.
But apparently, they're coming out with a 5th one.
God damn it! So much money for. If you're an actor and you're doing voiceover work,
you won.
Like you won.
You won in life.
You're just. I mean, damn! You're rolling into the studio.
That's it.
Don't get me wrong, voice work has got its own challenges. I mean, clearly we know what that's about. You know, professionals that we are.
I mean, who would have thought Tim Allen would have carved out this for his career? Like that's.
I know.
Like right? I did not know that was in the cards for him.
I forgot about him.
Yeah.
Like I hear the voice, I don't think Tim Allen anymore.
Exactly.
Yeah, it's very strange.
Right.
Equally as strange as 2 financial literacy podcasters talking about Toy Story.
Toy Story.
To open up a show. Welcome back to the #1 financial literacy podcast in the world. Sitting next to me, my partner in time. And really the only one I can rely on. The one and only Saied Omar.
Thank you, my man. Sitting next to me on my left is my partner in crime, Chris Nahibi. Welcome back to the show, everybody.
And behind the 1s and 2s is nobody.
Nobody, yeah.
Not a single person.
PTO.
No one. Yeah. No one that you know is back there switching cameras that you won't see.
Yeah. DJ Baboon on PTO.
Yeah, he is at a work-related event. It is, for backstory here, because he doesn't share too much of his personal life, I will.
Mm-hmm.
He works in marketing during his 9-to-5 job.
Mm-hmm.
And I wasn't aware that his shop was a pronoun shop until today.
Yeah, they were exactly. They wanted to make sure they didn't offend anybody.
So they had a little bit of a name tag type thing where they also allowed them to choose their pronouns on their name tags.
Yeah.
I don't know how I feel about it, but it was interesting to see how marketing people get together with a different mindset than, for example, me, finance, banking, law.
Exactly, yeah.
Very different. Very like loosey-goosey kind of like vibe.
I'm still very much the person that wants to make sure that nobody gets offended.
Yeah, me either. I mean,
I also think that, like, why even go there, right?
I get it. I mean, especially when you think about the marketing, like it takes a different mindset to do that, and there's usually a lot of creatives.
Yes.
So, whatever. Like I don't care one way or the other. Here's the thing: is I'm going to offend everybody. Okay.
Yeah, exactly. I'm inclusive with who I offend.
Yeah, I'm going to make all the jokes. There's no race or ethnicity that's safe. There's no gender that's safe.
Right.
And I'm going to ask questions. And if the questions sound insulting because I don't understand, one of us has a problem, and it's probably somebody's gone too extreme in one direction or the other. Yeah. And I'm just trying to figure it out. That's all I'm saying.
Right. Exactly. And it's on you to convince me otherwise. Right.
Or just break the logic down to me.
Or let's just move on with our day and carry on.
Can I ask a question about questions? A question about questions?
Yeah.
Why is it that when people ask clarifying questions, it's offensive as automatically like just assuming that you're trying to be offensive? Like if I say, hey, why are these your pronouns? Because I legitimately don't understand. Like I'm afraid to ask that question.
Well, that's the whole, I know. And that's the problem, right? It's like, that's what college used to be about, right? Is I think I listened to an interview back in the day where Bill Clinton said that the smartest people in the room answer questions with questions.
Socratic method. That's what they do in law school.
Yeah.
Yeah.
So it's like, and how is that now turned to become a bad thing?
Yeah. It's like you're prying. You're trying to get too much information.
Yeah.
You know
No,
what
it's not. I'm not. I'm trying to understand. I want to make sure I understand your position better.
I want to understand your position, Saied.
I want to know all the positions,
I want
Chris.
to understand it so well. Actually, which dovetails really nicely into a conversation we were having before we started the cameras today.
What was that?
We were having a hypothetical scenario about certain situations in their prime.
I did not know you were going to. We're not doing that.
You asked the question.
I did not. I didn't ask any questions. You were asking questions.
All right.
Absolutely not.
For those of you listening to the show, we have a little bit more than Toy Story and weird situations to talk about. We actually have a fascinating episode 253 for you. And right out the gate, I'm going to give you and everybody listening the ending.
Mm-hmm.
The ending is we don't know.
We don't know, right?
We don't know. And the likely broader answer to the ending is no one really knows.
Right. All we can do is present you the facts that we do know of now.
Yeah. So some of this is going to sound dark. Some of this is going to sound like a little bit of a recap. But the fact of the matter is there's going to be stuff here for anybody who's missing out on current events. There's going to be stuff here for people who want to understand earnings calls and the relevance. There's going to be stuff here for people who want to understand, the Mag 7 and their impact on the markets. We're going to talk a little bit about real estate. We're going to talk a little bit about the markets, and we're going to talk a lot about you and the things you're probably feeling at home but not articulating.
Yes. But before you do that, if you're listening to this show on Apple or Spotify, please leave us an honest 5-star review. It'll do a lot for the show. We'll read it actually right here on the show. If you're watching us over on YouTube, please make sure you subscribe, hit that like button, ring that notification bell. Make sure you do all the moist, goody good stuff. We have 2 viewing options for our listeners. We got Spotify, we got YouTube. You can take a pick, or you just want to listen to it, that's fine too. But if you really want to support the show, you got to head down into the show notes. Buy yourself an ice barrel. That's the number one way you can support this show.
Or get 12% off any of their products aside from the chillers.
Yeah.
Yeah. And the code, if you go to the website directly, it's just my name, Chris.
Chris.
Yeah, there you go. As in not Saied, because Saied is not cold plunge.
But is it? Yeah, it's Chris, right? Not Shris?
No, it's Chris.
It's Chris, yeah.
Just to be clear. All right. So the Fed has been explicit about wanting to cool the economy by increasing unemployment and to lower inflation. We know that is their intent. Mm-hmm. That is Fed policy. That's what they want to do. And if you've been living under a rock the last couple of years, you know they've had a really difficult time doing that.
Mm-hmm.
So markets seem to believe the opposite will occur, a rebound in inflation and a continued low unemployment. That is what the market is essentially betting on right now, right? Okay. And you're saying, well, Chris, what do you mean? Where is that coming from? We're going to explain. We're going to explain the trends that you can see in the economy and the market that says, hey, we don't think the Fed is done, and we're not exactly sure what happens next.
Done how? Well,
markets might be pricing in optimism today, early, right?
Mm-hmm.
They might be optimistic, and things might be reflective of that. And we'll talk about the stock market. We'll talk about home values and talk about some of the stuff that's happening there, which might have a good, actual positive impact for everybody, but might sound dark depending on how you look at the data. You look at the data for the purposes of, being a realtor. You're going to say, hey, wow, the transactions are slowing. It's a crazy cadence. It's not good.
Yeah. Refinances have come to a screeching halt.
But if you're looking at it under the lens of a consumer, you can say, oh, my God, this is approximately 60% of inflation. This means if values go down, inflation hits the target rate, that this is a good thing for the economy.
You're right. If that, that's the hope anyways.
So despite the Fed's hawkish tone, financial conditions have remained loose. Credit is still flowing. Employment, for example, is still staying strong, and unemployment is still staying relatively low, suggesting that investors might be betting on a, quote, soft landing, right?
Goldman Sachs reduced their expectations, I believe, of a chance of a recession down to 15%.
Yeah, it was originally like over 50, then it was like 35, and now, that. Yep. So it's kind of fascinating to see how, and I put very little credence in those kind of things because every recessionary economy had kind of not every, most large or impactful recessionary economies had like this moment, this pivotal moment. You had the dot-com bubble bursting, you had the subprime mortgage crisis leading to the great financial crisis, you had the industrial revolutions, you've had wars. I mean, there's been things that have been catalysts. I don't know that we've found the catalyst for what this may or may not be, or if there isn't one, maybe we won't have a recession.
Yeah.
You know, I'm willing to be open to that idea as well. And if
Yeah.
15% is low. So points to consider as we go through the show today. Could the resiliency of employment mean that inflation is more structural than expected? Meaning that inflation is just going to stay, it's going to manifest, and it's going to be slower. And maybe we don't have all the tools to fight it, but maybe it's just a prolongated, longer solution.
Mm-hmm.
Not a bad outcome, but it's going to be painful for a while longer. Number 2, is the Fed behind the curve once again, risking stagflation? So if some of these indicators that we're going to see here are true and others are not true, then would the Fed be facing an increase in inflation again, hyperinflation, or will we have this stagflationary economy, which we just essentially came out of, really?
Right. That's a period where you have a slowing economy, an increase in unemployment, right, and an increase in inflation.
Right.
Right.
That would be stagflation. And then lastly is how much of the market's optimism is driven by mega cap tech stocks that make up the Mag 7.
Right.
And we're going to tell you exactly how much of it is impacted by that today, and then the numbers are staggering.
Okay. Yeah, it is, because I believe it's funny. I actually looked into this right before the show, coincidentally. The S&P 500 is up 20% year to date.
Yeah.
S&P 500. Right.
Largely carried by the Mag 7, however.
Yes.
So a bit of a, in my mind, an asterisk. You can keep saying the S&P 500, but it's really 7 stocks that trade on the NASDAQ.
Right.
And we'll get into those towards the latter second half of the show that are really carrying the entire market.
I mean, how well are those 7 doing to carry the other, 493?
NVIDIA is doing quite well.
Yeah, exactly.
Tesla, after today, doing quite well. So we'll get into that. So some food for thought. And we're going to have a couple food for thought-like statements today because I think these are powerful indicators of not only facts, but they also help put in perspective the rest of the conversation we're going to have. Okay. Number 1, the Fed's 2% inflation target hasn't been achieved consistently for over a decade, except briefly during the COVID-19 recovery period where inflation shot far beyond that. So for context, I think you can carve out COVID-19 as a pretty exceptional set of circumstances. It's been over a decade since we hit the Fed's target.
Okay.
10 years.
Right.
That's a long time. The last time the Fed intentionally induced a recession to fight inflation was during the Volcker era 1981 period, where interest rates hit nearly 20%, but even then, inflation took years to stabilize.
Right.
So the whole point of this is to say we know that something is off right now.
Yeah, because that's also not the tactic that this Federal Reserve, FOMC committee has chosen to take.
They're not intentionally trying to induce a recession.
Right, because if they were, they would not have cut rates when they did. They would have just continued to hold because every data point was positive.
But right, they didn't have 20% inflation. They didn't have wildly high unemployment.
No.
They didn't have
GDP still reporting in the positive, right? Is it we haven't, according to their standards, haven't hit a recession, even though we feel like we've been in a recession.
We don't have a triggering event.
Right.
So they're looking around saying, like, shit, what do we do?
Yeah. How do we manufacture a reason to cut? Right.
Yeah.
Because like if everything is going well, but inflation is still high, they almost have to now produce numbers that show that inflation is coming down.
Now, the counter argument to that is, if you listen to the show on previous times, is that the unemployment numbers are largely inaccurate.
Yeah, they are. Right.
So there are lots of people who are saying, this doesn't make any sense. And like, I get it. And I guess the reason why we say something is off is because, like we talked about on the top of the show, we don't know what that is. We don't know the answer. I don't think anybody really does. We just know that the things we're seeing are very counterintuitive. There's a lot of positives. There's a lot of negatives. So let's get into that. While the Fed is calling for higher unemployment and lower inflation, the market is trading exactly opposite to that. Okay? Markets are now pricing in a potential rebound in inflation and drop in unemployment.
Why do you think that is?
Well, I think the markets have this way of looking at things from just a pure numeric standpoint, and they're saying this is not sustainable, right? You can't have the S&P 500 up this much while we're in a rate cutting cycle. Otherwise, it's going to go up higher. They're looking at all this saying, okay, something has to give, right? House prices can't stay as high as they are. Unemployment can't stay as low as it is. like these metrics typically offset and rebound and move off of one another, and they're not. They're all just staying in what we have traditionally believed to be healthy ranges.
Yes.
So the fact that we're in a rate cutting cycle and we're not seeing significant movement in any way, shape, or form, and you've had this unbelievable run up of home prices, of stock prices.
Mm-hmm.
If it just stays this way, here's the harsh reality, and it sucks for a lot of people. Everything's going to stay more expensive.
Yeah.
And we will talk about that as it relates to most consumers. And let me be clear, food is exceedingly more expensive than it once was.
Oh yeah, the very thing that the Fed likes to cut out when they get those inflation reports, right? Because they think it's too volatile, so they like to look at core inflation.
Mhm.
But let me ask you, so with the Fed cutting rates, right? How much would you say? Because I know the banking sector, right? But let's look at like the broader stock market. How many companies out there would you say, on like a percentage scale, are walking into profits just by the Fed cutting rates?
Well, other than people who are working on arbitrage, which are typically banks,
Yeah.
lenders,
Mm-hmm.
finance companies, for example,
Yeah.
not a lot.
Okay.
It really comes down to how they, well, and I will say as rates get cut, some of them, if they have lines of credit they're out on, it'll increase their profitability because they're paying less interest in those lines of credit.
Right.
But generally speaking, most well-run businesses have mitigated that interest rate risk to the markets by having something to offset it.
Okay.
So if you have a $1 million line of credit, let's say you've got $1 million in cash somewhere, you invest that $1 million of cash, it gets you returns, even though your company is a manufacturing company or a supplier of some product. Let's say you've got retained earnings.
Mm-hmm.
You take those retained earnings, instead of borrowing and using that as your working capital, what you do is you go invest it in something, you make 10%, and you have a line of credit that you're paying, 9% on. You now have 1% profit on money. Yeah, you're offsetting it, you're arbitraging. You're a good CFO will know those tricks. So you're going to walk into incrementally more profit. Let's say your index plus margin pricing goes down, right? And now you're paying 7%. Well, now you have 2% more profit on that arbitrage.
Okay, and that's how they look at it. And that's
for most companies. And
well-run companies.
For well-run companies, yeah. And the larger you get, the more sophisticated their financial strategies are. Some of them have, tax benefits. Google's notorious for this. They have overseas entities, shell corporations that strictly shield their tax liability.
That's when things get a little more complex.
People get really offended by it, but those are legal loopholes, and those are things in the system that you can do.
Mm-hmm.
It's just you have to be really sophisticated and have the money to try to save the money, if that makes sense.
Yes, yeah.
So a lot of people get really offended by it. I look at it and say, look, like these are all financial vehicles that we can all deploy. Is it economically viable for us?
Mm-hmm.
Yes, it pisses me off that some, billionaires don't pay a lot in taxes. Well, they're all in real estate and they're getting all the write-offs. I look at those and go, okay, wait a minute. I need to get more of those write-offs myself. How do I get that?
Yeah, exactly.
I don't go like, what the fuck? This guy's not paying any taxes.
No. It's just that's the game.
Yeah, you can only play the game by the rules that are in place.
Mm-hmm.
And you can get pissed off about the rules. You can get mad, but you still got to pass go. You still got to collect your $200, and you still got to try to buy a property. Don't get mad that I own Boardwalk and you own some other street.
Yeah.
Monopoly references on a financial littation podcast. What are we doing?
Yeah, I love that. You own the railroad company?
I didn't know any of the street names.
Yeah, I don't know. I don't know any of the low level ones.
Yeah, I mean,
Baltic. I think Baltic.
Yeah, Baltic's one. Yeah,
I think that's the low level one, right?
Yeah, I mean, I would know personally. I never buy low level.
I passed that one.
Yeah, didn't have an apartment complex on it. Chris did not buy it. So nearly 50% of U.S. consumers perceive themselves as living paycheck to paycheck, according to a new Bank of America study. This from Business Insider. If Haroon were here, he'd put the article right here and said, I'm looking at Said's big brown eyes.
Beautiful face, yeah.
Puppy dog face. By comparison, in Q1 of 2022, this percentage was at 37%. So approximately 13% more people, 50% of the U.S. consumer, 50% feel like they're living paycheck to paycheck. And how many people are actually talking about that?
Right.
They feel it. They'll say it on an anonymized survey.
Yeah.
But they don't tell their friends.
Yeah.
They don't tell their family.
Right.
They don't openly speak about it. And look, we see it. We're in this business. Like, I see people's accounts. I see people's finances. It's real. It's a problem.
Even in our household, for me personally, like, we are cutting on costs, trying to look for activities that are, more cost effective. Just why don't we just go to the beach? Just go to the park. Let's not spend all this money out, because right now it's not like that.
It's been a long time since I had to legitimately think about spending, and unfortunately, I'm at the point now where the spending's gotten so over the top and egregious, and to no real fault of anybody. I mean, myself, my wife, I look at it and I think to myself, okay, things are just costing a lot more.
Mm-hmm.
And if you buy the same things that cost a lot more, but you're buying a lot of things, you're going to spend a lot more money.
Well, yeah, right? Because, I mean, our entire economy is based off consumption, right? The whole thing. And if people are having to spend more, then all these other companies are becoming that much more profitable.
Well, that's the sick part about this process, right? So during inflationary times, companies raise prices because their costs go up. When they find a way to reduce their costs or costs go back down, they don't lower prices.
Nope.
Right. And I know people are saying, well, Chris, what if we were in a deflationary economy, or what if we were going through deflation or disinflation? Doesn't matter.
Mm-hmm.
It is extremely rare for a company to reduce prices after increasing them.
Yep.
So their profits are going to ultimately increase unless something legitimately costs them more money in perpetuity.
And that's why if you're sitting on the sidelines, that's why we like to talk about financial literacy so much. If you're sitting on the sidelines and you're not investing, whatever, even if it's only a little bit of money that you have left over, right? You are missing out. You are missing out during times like this. Companies continue. Look, like we mentioned at the top of the show, or I mean, not too long ago, the S&P 500 is up 20% year to date. Even though times are tough, everyone's living paycheck to paycheck, but these companies are doing very well. So if you were investing into the stock market, you would be doing very well right now.
And we're going to really spend some time on that towards the end of the show, where we talk about that in particular. And again, this is one of those things where you look at it and you go, okay, is the market walking towards a recession, or are they not? Like, there's so many signs that say, wow, wildly profitable, great economy. And at the same time, you have 50% of consumers feel like they're living paycheck to paycheck, like they can barely make it.
Yeah.
How much more expensive can things get? And this is the stunning part to me. You ready?
Yeah.
So it blows me away. I look at this and I think this is sad. The cost of living increases are primarily to blame for people feeling this way, right? Particularly food and housing.
I mean,
the basic essentials.
Essentials, yeah. I mean, the stuff that people like to, I don't know, those are the things that they care most about probably, right?
Yeah. Well, you can't not buy food. You can't not have a place to live.
Yeah, and if you do have a place to live, like let's say you're trying to cut back on costs and you just want to stay in more, so what are you going to do? You're going to cook more food at home, right? You're going to want to at least host people. I mean, that's even us at our house, right? Like, we would love nothing more than to host, but it's like, dude, everything is getting that much more expensive.
Yeah, dude, I was telling my brother that on the way here today. I was like, yeah, man, I ordered like a burrito from a healthy burrito place. It had like, no like mayonnaise, and it was like a chicken and like egg in this morning.
Is that that one that you got me the other day?
But a healthier version, yeah. The one I got you was ribeye. It was not healthy, right?
No.
Fantastic burrito, right?
Yeah.
They have a healthy version. How much do you think the one burrito delivered to me cost?
The one burrito. So
one burrito. No sides, no extra add-ons, no beverage. One burrito.
I mean, it's got to be north of like $20, right?
$46.
Get the fuck out of here.
40.
Why are you doing this?
Dollars. I mean, I had already gotten to the app, and it has like that little like, it was Postmates, and you know how it has you click like submit, and it has like this little like wind down of time before you submit, and it reprices or some shit. So the crease. I'm like, fuck, submit.
It's like putting an offer in a house.
It was so bad. I remember we got there, and I'm like, I ate it, right? And I'm like, this is not.
You didn't enjoy it.
This is not worth $46.
You didn't enjoy it. Oh, yeah, you could have gone next door. God damn, bro, $46?
One burrito, chicken, eggs, and a little bit of cheese. That's it. That's it. And it wasn't like it was a normal sized burrito. $46.
Got to start meal prepping again, bro. We can't be doing this.
Dude, the meal prepping isn't that much cheaper either.
No, come on, stop it.
I mean, it's cheaper, but I'm just saying, damn.
Yeah. That's where we're at now. Where it's like you got to mess with your day.
So while we had a period of disinflation, prices are in fact still rising. We've talked about that on the show multiple times. You're not getting to a deflationary economy where having things cost less. We're having disinflation. So things are still costing more. They're costing more at a slower cadence.
Yes.
So instead of things going up, 9% a year, they're going up 2% a year if we hit the target rates. They're not going backwards, at least not yet anyway, which in my mind is a compelling argument for the Fed to maybe want to cause a recessionary economy. Right? Maybe it isn't interest rate driven. Maybe it's like, look, like people just can't survive.
Yeah.
The Prometheus theory. And sometimes in order to create, you must first destroy.
But then if they do that, what happens to all the assets? Right? Like stocks, like property values.
Companies will hurt. I'm not advocating for it. I'm just saying, like, look, I don't know the
companies
solution.
I'm going to shopping centers around my house right now, and I'm seeing them.
Vacancies.
huge vacancies.
Yeah.
There's one furniture store. I don't even remember the name of it. But
Is it one of those constantly going out of business stores that actually went out of business this time?
No, it was one. It was on in a huge lot. It was one right next to. Of course, I would know this. Right next to Dick's, right? Dick's Sporting Goods. That is okay?
Not the strip club.
Not the,
That you. No.
not the strip club.
Just to be clear.
No,
Lots of balls.
You just got the
recreational
you got the
purposes.
video flag. Look at you.
For the recreational purposes.
Yeah. And they flipped it now into some like pickleball court. Like,
bro, this whole pickleball trend.
I've yet to try it.
I'm not doing it.
You're not going to give it a try?
There's a whole.
You tried the ice barrel. You're not going to try a pickleball?
No, can't do it.
You're too tall. You would look
I have
awkward.
tennis elbow now, and I don't play tennis.
You would.
Like, it's like, why would I purposely? That's like saying like I got a broken ankle, so I'm gonna go play basketball.
Yeah.
Like, I'm not doing it. Like, there's no way. And I see people online posting social media, and there's a lot of animosity between traditional tennis players and pickleball players, and it's like the new hood rat games.
No,
there's like beef, bro.
Oh yeah, because
people out there in these streets with these paddles, there's like a problem.
Oh, I know it's gotten really popular.
Yeah, like, you trying to press me, fool?
Yeah,
like, it's serious. Like, I'm not playing with no pickleball. I ain't trying to lose a finger over it. You know what I mean?
No, if I give it a shot, it would have to play 2-on-2. I'm not running across the court back. This is crazy. Stop. I'm not doing this.
Dude, there are so many sports that I'm just not athletically gifted to play. Volleyball's one of them.
Not doing volleyball.
I look stupid when I play volleyball.
Haroon's a really good volleyball player.
I know.
It bothers me he's so good. Beach volleyball too.
Yeah, I know.
God damn.
He's so chunky for it too.
He's got a lot of coordination.
Yeah,
He'll surprise you.
Yeah, except he'll have terrible ankles back in the day. He would every single week he'd be limping out of the gym going like, I'm gonna get sprung. And I go, how'd you know? I'm like, every week. Clockwork. Weak ankles, bro. While 50% of respondents to a B of A survey said that they felt themselves to be living paycheck to paycheck, the bank's report found that around 30% of households were spending more than 90% of their income on necessary expenses.
90%.
Damn. 30% of households that were reporting were spending 90% of their income on necessary expenses. That is wild.
Yeah, mind you, not too long ago, we gave everybody a rough draft of if you were starting to build a budget where it should be like around 60%.
You want to hear something worse?
What's that?
You ready for it?
Tell me.
Well, around 25% were spending more than 95% of their income on necessary expenses, the bank said.
Those are that's like living expenses. That's like food, mortgage, rent, utilities.
Yeah.
No
pickleball in that game.
Yeah, you're not playing pickleball, unfortunately.
No.
Yeah.
So inflation has left many Americans obviously struggling. The facts are what they are at this point. You can't deny these things cost a lot and people are feeling it. And I might not be talking about it because it's taboo.
Right.
But they're feeling it. And that's real.
Mm-hmm.
Another food for thought, even with higher interest rates, job openings per unemployed person remain at nearly 1.5 to 1. So 1.5 jobs available for every one unemployed person. I don't believe that personally.
Yeah, we've talked about the ghost positions, right? Like the ghost postings that they should have been taken down a long time ago.
But if you read into the survey indicating a labor market still has a pretty high demand. Historically, this has only happened during economic booms. So we've had very exceedingly prosperous times where the economy has boomed. That would be normal for this type of unemployment.
So how long do you think would you say? I mean, you're old enough to have lived through multiple cycles.
Son of a bitch.
But I mean, this is gonna be hard for you to say, right? Especially given like your position.
Oh, you get my age?
No, your position at the company that we work for. I know it's gonna be hard for you to say, but like, if we're not gonna experience, or it's very unlikely for us to experience a deflationary economy, right? Where prices
without a recessionary economy, it'd be very, very unlikely.
Challenging, right?
Yeah.
And that's where all the predictions lie right now. And prices of things are now compounding. Even if the Fed does get it down to 2%, it's still compounding from the previous year. How long until companies now realize this and they just start paying out more because people just can't afford to live?
Yes, this is actually a very valid point. So wage inflation is clearly lagging behind cost of living inflation.
Yes.
And the economics here, to your point, are critical because in theory, the way it's supposed to work is things cost more, companies raise prices, companies make more money, companies pass some of that extra earnings on to their employees
Yeah.
to help with their wage inflation. Historically speaking, I would say wages across the country were typically raised between 3 and 5% for a traditional wage increase.
Yes.
And that was really given to you for cost of living increases outside of the performance spectrum, right? Like if you perform well at work, you get promotions or you get something along the way. But generally
Right.
speaking, cost of living increases, that's what those are for.
Mm-hmm.
But we went through a period where there was 9% inflation through at least part of the year. We went through a period where there was 2 or 3% inflation, then there was 5% inflation. There's all these different periods. When you take the average inflation over the year, most people didn't get any increase at all because their companies were struggling.
Yeah, and just to avoid another round of layoffs or another reduction in force type scenario, they would say, okay, in order to keep some jobs, let's just not give out any increases or maybe cut back on some bonuses.
Yeah, no,
right?
it's difficult. It's
Yeah.
100% difficult. And let me explain how this also gets really, really bad. We've talked a lot about this in the show. And unfortunately, this is a reality that's going to be hitting home for everybody, especially in the new year. And I don't think most people realize this.
Mm.
Yes, property insurance has gone up.
Oh my gosh.
Yes, car insurance has gone up.
Somebody at work today told me that their premium on their car insurance went up 50%.
Yeah, mine has gone up about that as well.
Wow.
Yeah, it is. My payment went, and I don't remember. I think it's quarterly. It was like $400 something bucks. Is now like $1,500. It's insane.
Yeah.
And they billed me like some money in advance now. They're doing some really weird stuff. I don't fully comprehend it, and I just haven't had the time to invest into it. But the other kind of insurance that nobody's really speaking about, healthcare.
Oh yeah.
Think this through. Why is property insurance going up? Because there's allegedly a lot of natural disasters, right? They got the insurance companies that pay a lot, so now they're just raising premiums to cover themselves, right?
Yeah, and even if your area isn't experiencing it, like they got to make up for it on your side, right?
And in theory, why did car insurance go up?
Mm-hmm.
Because they had to pay extra claims.
Yeah, and not just that. Look at the average price of a new car right now.
Exactly. Okay, good. So healthcare in this country is getting more expensive, driven largely by how insurance pushes the medical profession to think about not proactive but reactive medicine, right? They're not doing preventative medicine at all. They're just doing responsive medicine.
Mm-hmm.
But more importantly than all that, we just got through this pandemic era where there was tons of medical expenses.
Yeah.
So you start thinking this through, insurance companies pay a lot of money. Healthcare insurance is going to rise. So let's say you're at a company and let's say you get a salary increase of 3 to 5%.
Mm-hmm.
Will that be enough to cover your increase in healthcare coverage costs for you? If your company, and some companies can pay more or less, and I don't know the answer here. Like, I haven't, but I know that's the next card to turn because a lot of these conversations take place effective January 1, whenever their enrollment period is for whatever the insurance company is.
Yeah.
So there's a lot of problems here. And again, insurance inflation is a real thing, just like, household costs, food, housing.
Right.
This is also one of those inflationary items.
The thing that scares me with this too is probably right now it's still, I feel like there's a little instability with what's going on in the job market. I wouldn't necessarily be recommending to anybody asking me, should I, jump jobs? I'm like, I don't know.
I don't see the job availability, frankly.
I don't see the job availability, but like also, is it safe to say that if you jump to another, ship, it's like, is that company stable enough to where you feel comfortable that there won't be any round of layoffs given what's going on? I don't know what industry, what sector you're in, so that all, it has to be factored in. But at some point, like the 3 to 5% increase isn't going to be enough. And the only way people are going to have to be able to make it up is if they do, in fact, jump ship,
Yeah, or they can take the advice that I've constantly given on the show, which I, myself, is that 5 to 9 is an opportunity to make money, and it is something that should be taken seriously.
Mm-hmm.
I know that runs afoul of traditional American notions that people say, I don't want to work 2 jobs or I don't want to have second sources of income. And I typically say to those people, like, I get it. I understand you want this life-work balance. I do too. But at the same time, I also want the freedoms that comes along with not being tied to one source of income.
Mm-hmm.
I'm not saying you can't be a dedicated, full-time, great employee, but you can also do something you're passionate about. Instead of having a hobby that doesn't pay you, have a hobby that pays you.
Yeah.
It's not terrible advice.
Right.
So let's move on. We're going to talk more about the impacts to your wallet and mine. This is from the Kobisi letter. Lower income households are experiencing higher inflation. If it wasn't bad enough that inflation has already been, as we described, now you know that the bottom 40% of households by income are now experiencing inflation that is 25 basis points higher
than
the national average, according to the Fed study.
Yeah, and that 25 basis points, albeit may not seem like a lot, that's 0.25%. I mean, you got to think for lower income households, like every last dollar counts.
So in 2022, these households saw inflation that was 50 basis points above the national average. This is primarily due to housing and food accounting for a larger share of their expenses. So I'm going to finish this, but I'm going to clarify. And it's sad. It's really sad stuff. Meanwhile, the top 20% of households by income have been experiencing lower inflation than the national average since about 2021. Basic necessities have never been more expensive, and that's the problem. Food and shelter. People are spending more money because we have a home affordability crisis. Whether you rent or you buy, that's a fact. Can't debate me on that. That's a fact. That's a fact.
Yep.
Okay? Your food prices have gone up. That's a fact. They've gone up way higher than this number we throw out as inflation. Oh, inflation, Chris, it's only 5%. It's only 2 and some percent. It's only below 3%. Yeah, on average. But guess what? To get us here, we lived through 9%. We lived through 5%. We lived through 10%. And the real inflation for some of these things was 20, 25%.
The real inflation.
And I believe that food costs you 25% more today than it did literally 2 years ago.
I believe that too.
And I don't think there's been any remediation to this. Like, nobody's gone like, oh, okay, well, let's fix the food price. Like, they fix food prices. They just give you shittier quality food.
That I was just gonna say that. Like, we actually show our kids, like, look, we spend a little bit more for healthier things. We just want you to see the difference. And Arya is a little too young.
A little too young, yeah.
She's too, but Adam gets it. He sees it, and he's blown away by it.
Was he 8 now?
Yeah. Well, he's 8.5. Yeah.
Yeah. So yeah. That's about the age where like light bulbs start going on and like you're putting all the pieces of life together and you start going like, wait a minute.
Right.
Shenanigans.
Yeah. Yeah.
So again, food for thought. Core inflation categories such as housing and service can account for up to 60% of the consumer price index. So if these numbers are so out of line and they account for 60%, you have to think about it in the context of, are we even going to hit the 2% target rate? And the answer we've said on the show historically is no, we're just not going to get there. And the Fed essentially gave up on it.
It's fabricated. If they do, I don't believe it.
This makes inflation harder to control even when other sectors like energy stabilize or decline. So meanwhile, it now takes 46% of the average American's income to cover mortgage payments. So approximately 50% of the average American's income goes towards just their shelter costs. Half.
Yeah.
A level not seen since the 2008 financial crisis. Compare this to the 30% benchmark that financial advisors, i.e. Dave Ramsey's of the world, typically tell you to target.
Yeah, well, Dave Ramsey doesn't even want you to have a mortgage, which is crazy. But yeah, like we've said on the show, right? If you're going to go off a 60-30-10 split for your budget, right, which is an ideal set of circumstances, I fully understand that, right? Then yeah, like 30% of your needs, right, should be going towards your mortgage or rent. And I get it. It's you'd have to be making a lot of money these days, man.
I have some needs you can help me with.
Be happy to help with your needs, Christopher. You like when people call you Christopher? I'm opening a can of worms.
So today, I was hit up in the DMs, and Said's was thoughtful enough to read my angry retort.
Yeah. And
the guy addressed me as Christopher, and I fired back on him, pretty much calling him out for being a scammer, bullshit artist. And, my brother said, hey, I received some feedback that you're being kind of an asshole.
Yeah.
And I said, dude, this is my most shared and liked content whenever I show examples of how I respond to people and call them out for what I think is nefarious and malicious behavior.
Yeah.
I understand there are salespeople out there. I have no problem with a salesperson taking the time, getting to know somebody, trying to pitch to them after doing some research. Like that, to me, you're investing time into figuring out who I am to talk to me.
It does not take very long.
It doesn't take very long, but incrementally, each one of those things that you do for each person can add up to a lot of time if you're marketing to several people. But to me, you want my attention? There's a guy who was sending me emails in the office every single week trying to get my attention. Smart fucker that he was. He knew my whole bio. Week 1, hey, man, I'll send you a free Yale t-shirt. Hey, man, I'm going to send you the whiskey like behind you guys on the shelf.
Okay.
Yeah, so he went deep. So that was one that caught my eye.
Perked up a little bit.
Then he was like, hey man, I know you don't listen. I know you don't watch sports anymore, but I mean, he was saying the things that tell me that he listens to the show, and I was like, okay, cool.
I'll hear him out.
So I responded to him. Like, look, man, like I'm not interested in the product you're selling, but if I ever have an opportunity, you're my guy.
Oh, good for you. Okay.
Right. And I said, look, put something on your calendar for 6 months. Let's talk.
Yeah.
You know, and all you got to do is remind me you're the guy who actually took the time.
See, and that's what I like to tell people all the time is I know we're in this era of technology and AI now and all that.
But using it to improve your efficiency as far as making your life easier because you got to do less work translates to the message you send me.
Oh, yeah. You have to be very, very careful, right? Like the guy that hit you up today that you took.
So the guy clearly used a bot to take the first name of my social media account. He targeted a niche, probably financial or entrepreneur influencer, probably somebody who markets on Instagram.
Right.
And it sent me a message that was this very generic, could have been sent to 1,001 people.
Mm-hmm.
Usually it's like, yo, what's up, boss? Like, how's life? You know, or something stupid like that. They're trying to be cool and hip.
Yeah.
But it says Christopher. And it was like, you could tell it was like just somebody took my name, dropped it in, sent it, and he's just shooting fish in a barrel. Who responds?
Yeah, and then you could tell that it was some bot system because of all the spacings, right?
Yeah, there's lots of red flags. And then he said, then he's like, I love what you're doing. That's another key. Yo, Saied, I love what you're doing. That could be sent to anybody with a social media preference, like profile.
Right.
You know what I mean? Like that could be sent to anybody.
Right. So what I like to tell people all the time is that, look, there's still always going to be a human element that you have to address, right?
Yeah.
Like you don't want to just imagine me coming over to your house and just say, hey man, I love what you're doing, and I'm just, it'd be like, bro, who are you?
And the worst part about it is, and I don't know why, I really don't, and I would like to know, they all have the same damn Instagram profile.
Does it work? Like maybe we don't see it. Maybe
it's them posting like vanity shots of themselves, posing in front of cars, buying expensive stuff, being in these remote like locations. It's all photos of themselves. It's nothing that's interpersonal at all.
Mm-hmm.
It's not about like their wife or their girlfriend or their family. It's all photos of just them in these locations. It's never like tons of photos. It's usually like 10 or 15 at most.
I don't see how that type of profile, if we're going to stay on this topic for a second, I don't see how that type of profile helps them close a deal.
It's because they want to seem like they want to make you think like, yo, like they all say
I'm doing so well. I'm so good at what I'm doing that I can do all, like, is that what it is?
It's, I don't need to, I am my own brand. I'm going to create a brand for you, brother. And they sell everything from like e-com to like social media. Like that was the old like hustle. Was they would get you like all these media mentions, right? And when I first started off doing like media work, yeah, like, you know, I work with a couple of those guys, and then one of them put out like one completely just stupid article about me, and I was like, they're out. I can't do that anymore.
Yeah.
And I realized you got to work through reputable sources and build up like a journalist media contact list over time.
Mm-hmm.
And, you know, you do it the right way. Yeah. And it's not fun. It's painstaking. You write and say a lot of things and give a lot of interviews that don't get used in the beginning, and then you kind of work your way through it. But most people don't know how to do these things, and all they want is the end result. So they're willing to pay somebody like this person who just slides in their DMs, who promises something, whether that's an e-com store, you give me $30,000 and I'll run you a store. It's too good to be true. I'll tell you right now.
Yeah.
Okay.
Exactly.
I've litigated enough of these cases. I know. Then someone will say, oh, well, hey, man, I can get you all this notoriety. I can get you articles and this, this, and this. Again, too good to be true. I'll tell you right now, it's not what you think it is. Usually it's paid advertisement. It'll say advertisements, or it's on some third-rate rag, which means nothing. If that makes you feel good at the end of the day, if somebody put some words and a picture of you on something that you can share, then good for you, but it ain't going to do anything for your business.
Right.
Or your credibility, for that matter.
Mm-hmm.
And it's just, I've seen enough of these to where I call them out. I usually respond. And people are like, why do you waste your time? Because I use them as educational tools so that if some kid who's watching my stories sees it,
yeah,
and they go, oh, I saw Chris respond to a guy like this. He told me to look out for these red flags. So what I'll typically do is I'll go to their profile, I'll scroll through it, I'll highlight what some of the photos look like, and then I'll show you my responses to them, and I'll show you how they can't respond when I call them out directly, and I know the game they're playing.
Yeah.
So this guy lied to me and said, I watched the show. I watched 40 episodes. I'm not going to watch anymore. He couldn't tell me a person. Nobody who watches our show
calls you Christopher.
is calling me Christopher.
Right.
Right?
Yeah.
Anywhere on the show, whether you're watching it on Apple,
yeah,
whether you're watching it on or listening to it on Apple, you're watching on Spotify, you're listening to it on YouTube or watching it on YouTube.
Right.
You know, in all the notes, I'm referenced as Chris.
Yeah, exactly.
It's like, it's a sign of respect, man. Okay, which one is it? Do you know me or do you not know me? Because it doesn't sound like you know.
It's not translating. Yeah, the math ain't mathing right now.
Yeah, math ain't mathing right now. So, speaking of math, shall I continue forward?
Yeah, please.
I know you're bored and everything. Talk about financial literacy.
Not bored at all.
Are you?
Yeah, I love the Kobisi letter.
Well, we're going back. You can't make this up. The average interest rate on a 30-year mortgage is officially back above 7%, kids. Okay, do you know anybody who may have called that in advance, Saied?
Because what happened? The 10-year went the opposite way after the Fed cut rates?
4.226% as of today.
So,
today is Wednesday, October 23rd.
So the 10-year has been, so for everyone that's listening, I know that they've been listening for a while, and they know we've said that mortgage rates aren't directly correlated with the Fed funds rate, and this has clearly been proven now that they track the 10-year Treasury. And the 10-year Treasury has been going up steadily over the last month.
Yeah. Well, let's get into that, okay? Since the Fed issued a surprise 50 basis point rate cut in September 18th, rates have now moved in a straight line higher. Well, the question you could ask yourself is, did the Fed break the market? What were they thinking? Was this the natural and logical? Because I'll be honest, there was a moment where I saw all the social media rhetoric on, September 17th, September 18th, September 19th, where all the real estate agents and loan brokers and wholesalers were like, oh my God, rates are going to go down. You're going to light the market on fire. Home price is going to go. Let's go, baby. Hey. They're doing all that, they're doing all that, right? And I was like looking at this going like, wait a minute, if that does happen, that could be cataclysmic for the market. I wonder if the Fed was astute and aware enough to know that they were going to get out of the yield curve inversion and push rates. Because we knew that was likely outcome. Right. I'm assuming because we're morons and we knew.
Okay, yeah.
Like if we're two idiots and these two idiots know, clearly the Fed had to know the bond market was going to rally, right? So do you think they were in their meeting with the FOMC and they were like, all right, look, Neil, put the crayon down, okay? We're going to cut rates 50 basis points, but we're fairly confident the optimism is going to drive the 10-year higher. And when it does, mortgage rates, because it follows along the 10-year, those are going to go higher, back above 7% probably. Neil, stop drooling and pay attention.
Right.
Okay? And as the bond market goes higher and interest rates go higher for the mortgage market, we're going to drive affordability down unless values come down. And that's going to make Americans feel better because, again, like we talked about in the show, because the FOMC watches the show.
Right? They have to, yeah. They've checked in on the stories.
60% of CPI is shelter and food. So if shelter, housing comes down, we're winning, baby.
Yeah.
Put that bib back on Neil. Put it back in his high chair.
Yeah, get with the crayons in the back.
You know what I should do? Neil and I connected on LinkedIn. Like he's in my circle. You know LinkedIn now that you've joined.
I'm on there now, baby.
So Neil and I are homies. Like we tight. He's in my contacts. I want to take that, clip it, post it to LinkedIn, and tag him.
Say something now, dog.
I just want you to know you can't get mad if I literally tag you in it.
Yeah.
And for the record, he does not listen to the show.
No, he doesn't. Yeah. I think he got insulted.
Well, equally insulting is, according to Yahoo Finance, existing home sales fall to a 14-year low in September. 14-year low of activity. And this to me is crazy because this is the complete and total exact opposite of what everybody was saying on social media. And this is why we warn you, all you out there, when Saied and I are like, a lot of these realtors, they might be seasoned. There's a lot of very talented ones out there, but a lot of them have never had an economics course in their life.
Yeah, they don't need to.
It's not required.
It's not required, right?
Yeah. Convenient.
Yeah.
So a lot of them will make these just broad statements about things they think are going to happen because they're in an ecosystem of other people who are feeding into the ecosystem. Like my favorite one, Keeping Matters Current, they blocked me now, so I can't talk shit anymore. They have an Instagram page, and all they do is they spin data to cater to their audience because their audience is realtors, and they sell their social media packages to realtors so that so realtors can use them to grow their own social media presence in their assets. And their assets all spin now's your time to buy is now.
Yeah, I mean, I got it here. They're no different than the National Association of Realtors, the Mortgage Bankers Association, and even Fannie Mae, okay? Yeah. They all predicted that in 2024, home prices are going to go up somewhere between 3 to 6%, okay?
Yep.
And in 2025, they're going to go up somewhere between 1 to 3%.
Yeah.
Like they're just going to continue. They're just going to continue to rise, and that's
how's that looking now, guys?
Yeah.
Yeah.
Yeah. I mean, the problem is there is an affordability crisis going on here.
How is everybody so laissez-faire about it?
Yeah, and
why are more people pissed off about it?
Why aren't more people?
Yeah.
Yeah, exactly. Like why? Like what is going to be the solution here? There is no solution other than somehow there being a shit ton of inventory coming online.
Yeah.
Right. I don't know how that happens. If home builders need to get some type of incentive, right, to get more units online. But the problem is the big players are really controlling how much they release at a time. We've talked about it on previous episodes.
They figured it out.
It's in their it's not their job to solve the economy. It's in their job is to satisfy the shareholders.
Yeah.
Right. So
we need to maintain profitability.
Yeah, it's not my job to care if every American has owns a home.
I'm building houses. I'm just not building them at the pace you want me to.
Yeah, I don't need to. I'm trying to make a profit over here. I'm not a bad guy.
Yeah, I'm just a guy.
Yeah. So I don't know what the solution is going to be here. I mean, I think inventory actually did spike up a little bit. It's over like 1.7 million homes listed for sale right now.
A little tiny bit. Not enough to move the needle.
Not enough. I mean, pre-pandemic, we're talking 2.3 million homes.
Yeah.
And that's, a
You really need
range.
1.5 million homes, 750,000 of which for rent, 750,000 of which for sale, and then you're starting to get back to normalized inventory numbers. Those are the numbers you need.
Yep.
That's a big dent. So in the interest of time, I'm going to read through this next portion from the Yahoo Finance article fast. I think there's some interesting points here, but then we'll go on to a little bit of the stock market concentration and the stock market portion of the episode. And then we're going to teach you guys about earnings calls again.
Yeah, let's do that. I'm really excited for that.
And I got a real-time example from Tesla today.
Let's go, baby.
So we can get into it. We can smush it.
Is that going to be the thumbnail?
No.
Tesla's earnings?
No. I already had a title in mind for the show.
Oh, really?
Yeah.
What is it? Tell me.
I feel like I should surprise you a little bit. You want it?
Is that good?
No, it's okay.
Okay.
It's markets versus the Fed. Who's right about inflation and employment?
I like it. Yeah.
And the reason why is a lot of what we're talking about here is that the Fed is making one decisive action, which is communicating what their thought is in the market. But the markets are saying something else. The markets are saying, we don't believe you.
Yeah.
Yeah, we don't believe you.
Yeah, the market has said all along throughout this entire process that we don't believe you. And sometimes they've been right, sometimes they've been wrong.
The Fed has lost credibility. Credibility
Between
the last show and this show. Like, I just can't speak English very well anymore.
Yeah, and we're at a decent time tonight.
Yeah, well, yeah, I know. I'm not even that tired. The Fed lost credibility with the markets long ago. The market has not believed the Fed for a very long time. As we get closer to what the Fed's going to do, they believe they're going to cut rates, but they don't believe those rate cuts are going to be as impactful as the Fed thinks they are. And that's why you have the optimism of the market.
It's going to be, I don't know. I don't think that, I think that the Fed said that they're going to cut their Fed funds rate. We haven't actually talked about this portion of their projections. The Fed said they're going to cut the Fed funds rate down to 3% by the end of 2026. Mm-hmm. That's the goal. You buying that?
Mm-mm.
You think they're going lower?
Nope.
You think they're going to go lower?
I think they have no clue. I think it's way too speculative. They were certain they were going to cut again 50 basis points by the end of this year.
Mm-hmm.
And I don't know that that's going to happen. I think November's got a strong possibility of a hold. And then December, you might see a cut at 25 basis points. Maybe. But, I mean, how much farther are you willing to risk driving the bond market up? You're going to shut the housing market down?
Yeah. Yeah, exactly.
You know, and look, I'm all for a healthy, normal curve, a yield curve, right? Where the lower end of the curve is cheaper than the high end and the long end of the curve.
Right.
But, I mean...
Is there always a balance between the 2-year and the 10-year? Like, the spread between?
The delta? Yeah. No, it's got some variance.
Does it? Okay. At least
bond traders,
healthy
bond
economy.
Traders would give you a range. I would say no. I would say that can always change pretty dramatically depending on consumer confidence, right?
Okay, yeah.
And the more uncertain the near term is, the lower the yield will be in the future, and the longer the end of the curve, you'll get a better rate.
Yeah.
But I will admit, bonds are not my area of expertise.
Mm-hmm.
Being sexy is mine.
Clearly.
I mean, I look like a Fidel Castro wannabe right now.
It's fine, though.
Yeah, it's a linen military shirt. You like it?
You're all about that military green.
I like the olive.
Yeah. You like the olive.
It offsets my tone.
Yeah.
U.S. existing home sales dropped to a 14-year low in September, likely as prospective buyers held out for lower mortgage rates, which I don't know they're going to get anytime soon because house prices are remaining quite elevated. Mm-hmm. Home sales fell 1% last month to a seasonally adjusted annual rate of 3.84 million units, the lowest level since October of 2010, the National Association of Realtors said on Wednesday. Economists polled by Reuters had forecast home resales would be unchanged at a rate of 3.86 million units. Home resales, which account for a large portion of U.S. home sales, decreased 3.5% on a year-over-year basis in September. Home resales have struggled to rebound after being depressed by a surge in mortgage rates in the spring. It goes on, but suffice it to say, ain't nobody buying.
Right. No, not right now. Who can?
Yeah. And to cap off the Kobisi letter, can I?
Please.
Stock market concentration has rarely been so extreme.
Mm.
So now we know the housing market's got some turmoil. Good or bad or ugly, we don't really know what the outcome will be. Hopefully that prices will come down with time. The top 10 U.S. companies now account for 18% of the global stock market capitalization, the most since the early 1970s, baby.
So break that down. So
Since it was Funky Town.
Accounting for 18% of the stock market capitalization. What does that mean?
Right. So the market cap of a company is
Yeah.
essentially its market valuation.
Yeah.
Right.
How much it's like, I guess, worth?
Yeah. There's calculations we talked about on previous shows, but effectively you're just finding out the size of the company, and it's a way to compare one company to another.
Yes.
When you take the size of all the companies, you're like looking at their share and their stock price and the number of shares that are outstanding, effectively you can take the cap algorithm, come up with a total market cap. Now the question is, if Tesla is a massive company, it's obviously going to be a bigger contributor to the overall market capitalization, this all-in number.
Yes.
So if I'm worth $100 million
Yeah.
and Saeed's worth $1 million,
Right.
I am clearly a larger portion of our aggregate market cap of $101 million.
Right. Exactly.
Right?
Yeah. Collectively, on average, it's $50 million. I'm like, yeah, baby, on average, baby.
Yeah, well, unfortunately, the top 10 U.S. companies now account for 18% of that, which is a big number. How big, you say? Well, over the last 15 years, this share has tripled, right? So larger companies are now worth more and own more of the collective stock market. To put this into perspective, even at the 2000 dot-com bubble peak, the top 10 firms' weight was 14% or 4% lower. 4% lower before the dot-com bubble burst.
Wow.
So, and you're saying, Chris, well, what is the dot-com bubble burst? Why is that so impactful? Like, why are you saying it all snotty and zesty and shit?
Because these are all tech companies, right?
These are all tech companies. They're all traded in the NASDAQ.
Yeah.
Don't worry. We'll get there.
Yeah.
Hold tight.
Mm-hmm.
Sit. Listen. Grab a beer.
Grab a beer.
Like Haroon's doing right now.
I really enjoy the listeners that show us when they'll like send screenshots or like they'll post on their stories and they'll tag us.
Yeah.
That they're watching the show like in their living room. I think that's so cool.
You do?
To me, I'm just like, it was a little weird at first, but then I'm like, man, I appreciate you. Thank you.
Yeah. I mean, if you're sitting down watching our faces while you eat food and you can eat it,
Yeah.
good for you.
Good for you. Yeah.
You know,
You're
two cows and cow.
Yeah.
That don't.
2 cows and cow.
Yeah. And sometimes it's 2 cows, cocktail, and cows. There's so much. Oh, somebody just messaged us on the online store. I'll get back to that on Shopify. See?
Oh, yeah. Let's go, baby.
Interactive, brother. At the same time, the top 5 U.S. companies reflect 15% of the global stock market's market value, the most since the data began tracking in the 1970s. A few key U.S. stocks effectively are the stock market. All right. Let's talk about those stocks, shall we?
Let's do it.
Again, some food for thought. The Mag 7 stocks, which are Apple, Google, Microsoft, Amazon, Nvidia, Meta, and Tesla.
This scares me, man. Something about that really scares me.
Yeah, and I will say these aren't all traditional tech companies in my mind because of what and how they do it. But so now these 7 companies account for 30% of the S&P 500's total market cap, a level of concentration not seen since the dot-com bubble burst the early 2000s, and they all trade on what is a tech-heavy exchange, the NASDAQ, right? So this is a good opportunity to talk about earnings calls and to talk about how impactful these companies have been to the market.
Okay.
I don't know if you watched the news today, CNBC.
Not today. I've been knee deep in
Working.
in work stuff. I've been grinding.
You got a job.
I
J-O-B.
I got a job. I've been answering a lot of phone calls.
Yeah, no judgment. So Tesla had their earnings call today.
Okay.
And what we're going to tell you and talk about, if you want to apply it, I think there's a great opportunity here. So I did a little bit of, forward thinking.
Look at you. I got an email from them because, not too long ago we were shopping for a EV car.
Mm-hmm.
I wanted to trade in the Jeep. Oh, so sad. R.I.P.
Yeah. Oh, you don't have that anymore.
I'm very sad about it.
Yeah.
I know.
That's tough.
But then we ended up getting an EV, and we were in the market. It was between Tesla and the Volkswagen, right?
The Volkswagen.
The Volkswagen. Never. I'd be honest. Growing up, never thought I'd ever own a Volkswagen. They offered that 0% financing. I was like, sign me up.
Yeah, it's a good deal.
Yeah. And I got an email from Tesla the other day saying that they're offering 0% financing again.
Oh, really?
Yeah. 0%. That's what, so I don't know how this plays into your forward guidance on Tesla, but it's zero. I think 0% financing on Model 3 and Model Ys.
Well, so we're going to talk about Tesla. We're going to talk about their earnings call today. We're going to talk about what that meant for the market. And if you want to apply this, 1 week from today is Tuesday, October 29th, the day this episode 253 will drop. On that day, Visa, Pfizer, HSBC, Chubb, a lot of companies will report. There's pages and pages of them. But Google, Alphabet, one of the Mag 7 will also be reporting that day, today, the day you hear this. So if you want to listen to earnings call in the morning, you can do that, right? If you want to listen to it recorded later on, you can also do that. And if you want to see what the market just does and you want to see it make headlines, you'll see that. And you'll be better educated because you listen to this show today.
Yeah.
Hashtag blessed.
Blessed.
Tesla reports they mixed their third quarter results after the bell on Wednesday. But the stock jumped in after trading hours as investors cheered the earnings beat. Higher gross margins and news that Tesla's cheaper EV is on track for production next year. CEO Elon Musk also added on the earnings call that Tesla's volume growth could be 20 to 30% next year. So the earnings call.
Cheaper EV?
Yeah, they have a cheaper model coming out. Yeah, like a lower end version than the 3 and the Y.
The Model 3, really?
Yeah.
Wow.
And he's really trying to democratize the space, to be taboo and cliche and use the word that's often too used, democratize.
Mm-hmm.
Earnings calls are really going to tell you about the performance in the previous quarter. So the earnings calls you're getting today is a Q3 2024 earnings call.
Like a report card.
Yeah. They're not allowed to give too much forward guidance, but they're allowed to tell you some things like what he noted here. So he's saying that we beat the earnings expectations, that the analyst people who cover us, who are experts in knowing how we perform, they look at our public filings, they follow and track our stock, they expected us to do X. Well, we did X plus more.
That's like patting your own self on the back.
Yeah,
which I'm seeing a lot of people do on LinkedIn. That's all everybody does. They just pat themselves on the back.
Self-promotion, baby.
Bro, it's crazy.
It's the best.
It's crazy.
It's the best.
Right.
Surprisingly, our videos do not do that well on LinkedIn.
Yeah, haters.
I think it's just they're not acclimated to a video platform, and they want to see like text and like graphs and stuff, and instead I give them your face. So it doesn't sell on LinkedIn. Right. You just got to put a graph in your face.
That's all you need to do. Yeah. Moving.
So not only did he have an earnings beat, but he's also expecting higher gross margins and that this cheaper EV is on track for production, which will further boost their position. So a lot of positive news for people to go, oh my God, let's trade them up. Let's trade the stock price up. For the quarter, Tesla reported revenue of $25.18 billion versus I can't even say it, so much money, versus $25.4 billion per Bloomberg consensus. Higher than the $25.05 billion it reported in Q2, and also topping the $23.4 billion Tesla reported a year ago. Crazy. So they're making more money than they did a year ago. They're making more money than they did the previous quarter. Tesla posted adjusted EPS earnings per share of 72 cents versus 60 cents expected. So EPS earnings per share is typically how I like to look at companies. Yes. And in this case, it's a great way because the analysts are saying, hey, we expect them to make about 60 cents per share. That's how profitable they're going to be. And in this case, when you multiply it times the shares and you do some of the math, you get to approximately 25 billion and some change. Well, they beat that number and they provided a 72 cents per share. That's a revenue beat. Yeah, they beat the expectation.
Big deal, right?
Yeah, it's a big deal. On an adjusted net income of 2.5 billion and free cash flow of 2.9 billion. Man, it's that's a lot.
Yeah, it's a lot.
It's a lot of the billions.
They're doing all right over there.
Billions and billions of dollars.
Like we say on the show, it's a lot of millions.
The closely watched gross margins figure came in at 19.8%, much higher than the 16.8% expected. So for Tesla, increasing profitability and efficiency in producing these cars has been a strong narrative of criticism and concern for the street. How are you going to increase your margins? Well, you increase your profitability while you're selling more units. And unfortunately, the world that we live in is every single quarter you got to improve. Well, he did. And he provided a return, and it's pretty significant. So some food for thought, because we like that in this episode.
These are the statistics that really hurt, man.
What
you're about to read.
Yeah. This is one of the reasons why we tell you to invest in products that you believe in. I bought my wife, my wife and I bought her Tesla early on. I can't remember what year. I think maybe it's 2019 model. I don't remember.
You're one of the early birds.
Early birds, yeah, early-ish birds. But we have unlimited charging for life on the thing. It's a great car. We spent over $100,000 on the damn thing. A $1,000 investment in Tesla stock at its 2010 IPO would be worth over $2 million today, making Tesla one of the greatest stock market success stories in history. Its earnings calls often shift the market sentiment globally.
Wow.
Now, that's a pretty powerful response to your earnings calls. You can shift markets globally. You can change the end result in the day of how the entire stock market traded.
And it's not just him. It's not just the company. It's also him, as in Elon Musk personally.
Yeah.
That's why people take great exception to him talking about other stocks, right? Or cryptocurrency for that matter.
Well, yeah. Well, and that was kind of cavalier, and there's all sorts of reasons why I think there's a whole narrative there that we don't get into on this show without you getting all upset about the crypto bros. And
I love the crypto bros. They're my favorite people.
Of course they are.
Just try to stay alive.
Are they though?
Yeah.
That being said, earnings calls are fascinating to me. Some of them are a little bit long and dry. Some of them are entire events. Think Berkshire Hathaway, right? But in my mind, if you own stock in a company and you have a good amount of exposure in it, you owe yourself the courtesy to listen to the earnings call at least once or twice a year. You do 4 of them a year, right? Just so you get a feel for the company and who's talking. Who knows? You might listen to the call and be like, oh, God, that CEO sounds like a jackass. Yeah. You don't know. I mean, Elon Musk is so visibly known that people know who he is. You don't have to listen to an earnings call to know. But there's a lot of people who you would otherwise never hear outside of their earnings call.
Because it's not just him speaking, right? It could be other people at the company.
Chief operating officers, presidents, chief innovation officers, chief technology officers. I mean, you name it. They have all sorts of chiefs, but not enough Indians.
Right.
Yeah. So, yeah, there's a lot of reasons why you want to listen, and I think there's a lot of positive benefit for it. But I have some final thoughts to recap the show, and I think they're valuable. We haven't really had structured final thoughts before, so this is me, beta testing a little bit.
Ooh, a nice little coalesce into a nice final thought. I like it.
Yeah. So at a time when the Fed is asking us to slow down, markets seem to be speeding up, right? The Fed wants us to slow down for inflation to come down, for consumers to be reserved, but markets are going the other direction. They're speeding up. A pretty big disconnect between the market and the Fed, right? Why this is happening? Well, we don't know, like we started the show with, right? If consumer behavior, earnings calls, and economic fundamentals are all sending conflicting signals, which they clearly are, how can anyone confidently navigate the months ahead?
Yeah, anyone, by you mean individuals and companies?
Well, what I'll say is be cautious. It's okay to be optimistic. It's okay to be negative. It's okay to be a doom and gloom Peter Schiff, right? It's okay to say, I think this is going to be fantastic. We're going to make it to the side. It's going to be great. Gumdrops and lollipops. Give me my goddamn unicorn outfit and put it on, right? But be cautious. Be thoughtful. Be pragmatic, because really nobody knows. And there's a lot of mixed messaging here. If you want modern day terminology, vernacular to appeal to the hip kids,
okay,
there's a lot of red flags. There's a lot of green flags. You got to navigate.
Red light, green light?
Red light, green light. Red flags, green flags.
Okay.
Yeah. Give me a lot of green flags right now, Saied.
Okay.
So even though the inflation rate is moderating, prices are still rising, just more slowly.
Yeah.
That's not a good thing. That's a bad thing. Right? Yeah, maybe they're rising slowly. They're still rising. For everyone, everyday consumers, disinflation feels like inflation because they're paying more today than they did yesterday. Disinflation is not deflation.
Right. Two completely different things. That's the rate of which things are increasing is slowing down versus prices of things actually slowing down.
Yeah. I'm kind of proud of us tonight.
That was very impressive, sir.
Was it?
Yeah, Christopher.
Was it the food for thought little tidbits, or was it
I like
the
that. I like
recap?
that. I like that. The recap, put it all together.
Little bow.
Yeah.
Yeah. You would open my package.
I would open your package.
Okay, just make sure.
Yeah.
I want to be clear.
I'm not opposed.
You're not opposed?
No.
All right, I'm glad that you're receiving of my package.
Yeah. You're welcome. I don't know, man. This is. I think we're entering into a very interesting time. Can't wait to see how it plays out.
Normally on shows, I would ask you what your thoughts are, but I don't want to do that this week because there's so much more data that I think is going to come out, and I want to kind of see where things go
Yeah, there's a lot
in
of
November before I make predictions.
I actually have that economic calendar. Let's see here. On the 29th, that's next week, we got the JOLTS. Job opening labor turnover survey.
Yeah.
October 30th, we got ADP employment, and we got GDPs for Q3, right? October 31st, we got PCE, baby.
Yeah, you know me.
Yeah, that's the Fed's favorite gauge for inflation. And then November 1st, we got the jobs report. So, and then we got the 50 election, baby.
See, man, we're on a show, right? And I told you I don't like these scammers hitting people up, right? This is me minding my own business. I'm just here doing what we do. We're doing a show.
Live.
Yeah. Real time. Hot mic.
Yeah.
Hot.
What are you going to say?
So hot.
What are you going to say?
I get a message through the podcast merchandise store, which, by the way, if you haven't been there, thspod.com.
Mm-hmm.
Or you can click on any of the links on any of our stuff. There's merch store there.
Great stuff.
We sell merch.
A lot of sexy people like Adam wear it.
Yeah, Adam Schaefer.
Mm-hmm.
Yeah, he wears it. He's in incredible shape in just like a month.
That's impressive.
If
That's
you're not watching
memory.
his series on YouTube,
That's
you
muscle
owe yourself.
memory. Yeah.
He's got an incredible shape. He's added muscle and lost body fat on a bulk. It's like, fuck you.
Yeah.
Anyway, so I'm sitting here and I'm like, oh, new customer message on October 23rd, 2024 at 8:20 p.m. Like, great.
What's up?
What's up?
Yeah.
Yeah. Hi, store owner. I'm Bucky, spelled B-U-K-K-Y. Nothing
Bucky.
good follows that.
Come on, Bucky. You can do
Hi,
better.
store owner. I'm Bucky. Which one of the Avengers are you best friends with, Bucky? A Shopify expert
Oh, no. Don't do this, Bucky.
who uses Buck Oladifa fees. Buck Abdullah fees at gmail.com. So this looks all sorts of reliable.
Yeah.
Your store's setup and product niche are impressive. However, I noticed there's room for improvement in driving sales. Your store's sales channels aren't optimized for high traffic and conversion. Can I share with you some effective strategies for organic growth and optimization? Best regards, Bucky. Okay, this is exactly what I was talking about.
Yeah.
So, although not in the DMs, it's a direct message. First of all, you don't have a corporate email. You're using a Gmail account. So I'm going to -1.
Okay.
Your name is
You're putting a lot
Abdullah
of people on game right now.
Abdullah Fiz Bukolo. Or Bukola.
Mm-hmm.
Your name sounds like you're from a different country, but your country code is U.S. Is it?
Yeah.
Okay, fine. I'll discount that, but a red flag.
Mm-hmm.
Let's break down your message. Hi, store owner. Not higher standard.
You didn't go over just to see, like, it's literally
Not Chris, not Saied.
Our names are right there.
Nothing. Nothing that says you even read the website. I'm Bucky, a Shopify expert. So all you know is that this is the Shopify store.
Yeah.
Your store setup and product niche are impressive. What is my store setup?
Yeah.
What is our product niche?
Yeah.
What have you told me that you haven't copied and pasted and sent to 6,000 stores tonight?
Yeah, if there's anything that we have learned ourselves and we've learned from others in the space that we really appreciate, a la the Mind Pump guys, it's you got to provide value.
No value here.
Yeah, you have to show me that you have value, and you're gonna give me some value for free for me to trust you.
And this guy, okay, look. Okay, great. You sent me a very generic message. You provided me zero value. Now you've wasted my time. Nothing you said is going to help me. However, I noticed there's room for improvement in driving sales. How?
Yeah.
What am I selling?
Yeah.
You haven't even said. What am I selling? Have you seen my page? What am I selling? Yeah. Your store's sales channels aren't optimized for high traffic and conversion. What sales channels?
Yeah, exactly. We're selling merch, bro.
Where am I going to? What are you talking about?
Yeah, and for everybody out there that's listening, we don't sell the merch to generate. It doesn't. We don't. It's really for the listeners to.
We don't make any money on this stuff.
We don't make any money. Yeah,
it's like maybe like $3 or $4 a pop or something like that.
It's really for the listeners to wear something cool and like support the show, and it's like advertisement.
We love you, loving us, loving you.
Yeah,
simple.
Come on now,
right? Can I share with you some effective strategies for organic growth and optimization? Best regards. No, Bucky, you cannot. And I would normally post that on my story, but I don't want people getting all sensy about me, like calling people out.
Yeah, no. More people need to get called out.
That's what I'm saying.
Yeah, it needs to be more of it.
And during this show, I probably received 10 or 15 messages, and I'll show you when we get off the hot mics, of people going like, I love this, bro. Never stop.
Yeah.
Never stop him.
I almost said something that I'm not allowed to say anymore.
Yeah.
Can't stop, won't stop.
Oh. Bad boy.
Bad boy. Good. With the daddy reference.
It's never going to not be funny anymore.
Dude, all the videos that are resurfacing, and you're like, what subliminal message were you sending on this talk show?
He wasn't trying to hide it at all.
There was one, I didn't fact check to see if it was a real episode or not. I don't know how crazy AI is anymore, but he came on the Ellen show and gifted her a t-shirt with a videotape on it. Like,
yeah.
Was that really happen?
I don't know, but
what does that mean? That's like, because it's like, why would Ellen have Diddy on the show? It almost feels like he forces her hand, bring me on the show.
There was a clip on the show too where he was doing like some weird sketch with him, her, and somebody else in the middle. I can't remember who it was.
French.
Huh?
French?
Was it French Montana?
I think so. I've seen a bunch of those, yeah.
Where he basically said like, oh, they didn't. He went and whispered something to her in front of him, and he was like, what the fuck? And he like tried to redo the skits, and then they were gonna cut and restart.
Yeah.
And it was super awkward. I don't think he was hiding it. I think he was just like, no one's ever gonna can't stop, won't stop. I think he meant that.
Yeah, I got enough people in my corner that'll make sure I'm never going to jail.
And now he's bunkies with that. With Sam Bankman-Fried.
I can't. They're actually bunkies.
You could not have called anybody who the Vegas odds on that had to be in. I mean, what?
I know, right? Exactly. I mean,
can you imagine Sam Bankman-Fried getting another celebrity endorsement this late in the game?
Who's calling who daddy?
Oh, let's be honest.
Let's be honest.
Sam Bankman-Fried ain't doing well.
No, he's not doing too well right now.
He probably was the guy going, wait, who's coming in here? No. Hell no. No.
Yeah.
No.
Yeah.
He probably tried to punch himself in the face to go to the infirmary.
God damn it. Yeah, and it's just the arrogance that he thought that he could get away with it, right? And he did for a long time. He did.
Well, innocent until proven guilty.
Yeah, like what's gonna happen? Like Ciroc was the bottle at all the clubs, right? I
don't know.
I haven't been in a long time, but it was the bottle. Like,
I don't think that it ever was like the bottle. I think it was just like
no,
that was a lower level cheap stuff.
No, but that was the one that most people bought because it was lower level cheap stuff.
Before
right?
inflation.
You're not out there buying Cristal and shit, right? So
speak for yourself.
Come, you've done that? You've bought Cristal?
Yeah.
Why?
Bro, you want to have this conversation?
No, I don't want
a certain series of events.
I don't want that part of the. But why?
A certain series of events in Miami cost me $30,000. In Miami, so the hot nights, they have $1 minimum, not a bottle minimum. And if you don't spend the money, they're going to charge it for you. So at the end of the night,
you might as well.
You just start ordering everything.
Yeah, exactly. You're pot committed at that point.
Oh yeah, and then you just order everything and you spend like an idiot. That's why you ever go to like Miami clubs and like right before they close, like everybody seems like they're partying their ass off. It's not because they want to get more drunk.
Yeah,
it's because they got to spend the money.
Yeah, might as well get bang for a buck.
Yeah.
Jeez. Yeah, those bottle minimums, like they create such a crazy culture, man.
Looking back on it, man, like I will go. I'm older than you, so let's just get this out of the way now. I remember going to clubs when it was just a VIP room that was off that nobody ever saw, right? Like there was the club.
That's worth spending money on at least.
Right. You couldn't get in that way though. That's not the way you got in. You didn't get to spend money to go into a VIP room. You had to be somebody or be connected.
To get the VIP.
You could. You were VIP because you were literally VIP. You couldn't buy it.
Right.
Access to those rooms was like, hey, we want to have some celebrities. They want to party in privacy. We bring in some people, blah, blah, they have their own separate party.
Mm-hmm.
I get that, right?
Right.
Which is also weird to me because, like, why are you going to a club if you don't want to be seen?
Yeah.
But whatever. Like, that's the way it used to be. And then you have open dance floors and, like, whatever. And then it got to the point where it was standing room only. Then like, we'll put little like ropes out and we'll carve off sections and we'll sell that real estate.
So smart.
And I'm like, come on, man. And then they do like this bullshit where they, but if you buy this bottle, it comes out with streamers and rockets.
Yeah, and you look like you're that guy.
And then everybody has a streamer, so it lights up the room so they can see you a little bit.
And then
then they're like, oh, that's the guy at the table with the streamers.
And then if you want the bowling table next to the DJ booth,
real estate process, man. You pass boardwalk.
Yeah, seriously.
You know,
I never really understood that.
Like, I mean, I don't think there's really anything to understand. It's just you want the prime real estate, you're gonna pay for it.
No, it's just because you want to be seen, though. It's like
the sick part is a lot of the best tables didn't go to people who were paying. Like it was routine during when I used to spend a lot more time in Vegas. People didn't know this, but like we always have the table right behind the DJ booth at like some of the hotter day clubs.
Yeah,
we never paid.
Oh wow,
never paid. Mm-hmm. We knew the promoters, we knew everybody, and everybody was kind of a crew. They all kind of went around and hung out, and somebody was paying somewhere, and it might be your turn one time or something like that, but. Generally speaking, we were getting comped.
Yeah. Because
you rolled with all the people and everybody wanted to be where you were at. So those people came in.
Yeah, man. That's just the greatest lesson, right, in life that if I could teach Adam and Arya, like, at a young age, a lot of life has to do with not only what you know, but who you know.
Yeah. That's the real value of colleges now, too, which is also sad.
It's just like a networking thing.
Rolling the dice to get somebody that becomes somebody that you know.
That you're in the circle.
Yeah, I like to think that I'm the somebody that people know.
Yeah, you are that somebody.
Because if so, I don't have any friends that I know that came up that I'm like, hook me up, bro.
That ain't true, bro. You know people.
You host a podcast.
Yeah, you host a podcast.
You hook me up?
Yeah, what can you do for me, bro?
I need a cold plunge, 12% off.
Oh, yeah, go. It's in the show notes.
Yeah.
Make sure you click the links.
All right, say goodnight.
They make it really hard now to like get down to the show notes. Like I remember the other day I went on our last episode and I scrolled down and I clicked more and then you have to click more again. You have to find it you have to really hunt it down.
This is not a problem that I have.
And then on top of that, the way YouTube is like throwing ads on the
the separate show notes come up underneath those ads.
Yeah, separate show, and then it looks like let's say for instance on the last one, what was it? I think it was like Old Spice, right? It looked like Old Spice was sponsoring our video, but it was just an ad through YouTube.
They are. I'm just not sharing money with you.
Son of a bitch.
Yeah.
You got anything else?
Nope. I'm looking forward to editing this show, so stop talking.
All right. We miss you, Haroon. Love you.
We don't.
Yeah. Good night, everybody.
We really don't miss you at all.
Yeah, I do.
Bye.
Bye.